Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news both the US and China are eyeing rate cuts to bolster wavering economies. While all financial market attention is on the US Fed and its Thursday rate review, and market positioning is underway relative to the expected 25 basis points cut, there is other economic news being released. The New York Empire Factory Survey delivered a negative surprise, with new order levels falling sharply when they were expected to rise. That drove their overall survey negative when an expansion was anticipated. Across the Pacific, in an unexpected result, China's retail sales data was released and were expected to have grown faster in August by 3.8%, up from 3.7% in July. Some anticipated a 5% rise, but in the end the rise was only 3.4%, and that was an 8-month low. And China's industrial production was up 5.2%, a 1-month low, good but less than the 5.7% in July, and also less than the expected 5.8%. All this was done with only a 1.6% rise in electricity production and a 3.2% fall in the production of fossil fuels, according to these official stats. And China's house prices were generally stable in August. There were a few more signs of marginally higher prices in a few more cities for new developments, but the sales price of pre-owned housing continues to droop, and the trend is becoming ever more embedded as pressures mount. But probably worse from China was that fixed asset investment hardly rose, up just 0.5% for the 8 months from the same period a year ago. It was expected to have risen 1.4% on this year-to-date basis. August 2025 alone actually came in lower than August 2024, a worrying sign. And it is possible that the upcoming review of China's loan prime rates may be cut to bolster their wobbly economic position. These are due for official review at the weekend. In Indonesia, they launched a new $1 billion economic stimulus package to bolster economic growth as a way of stabilising widespread unease about the country's direction. And Indian exports softened in August, and their imports did too, and by a bit more. That meant the expected $30 billion trade deficit for the month was lower than in July and lower than expected. India also had good labour market news, with their jobless rate falling to a record low of 5.2% when a small rise was anticipated. In Australia, their National Climate Risk Assessment was released yesterday. They are trying to prioritise and plan how they will adapt and respond. The report says that while the world is already 1.2 degrees hotter than pre-industrial times, because of its sheer land size, Australia is warming faster and is 1.5 degrees hotter. Australia is experiencing more intense heat waves on land and sea, rising seas, and more frequent coastal flooding. Although the usual suspects remain in denial, a surprising number are now accepting it has become an urgent issue. Insurance premiums, even availability, will be how to affect most people in Australia. But back with the headline financial market news. Ahead of the US Fed decision, equity markets are buoyant and all in on optimism. But bond markets are wary, and the US dollar is wavering, and commodity prices are little changed except for precious metals. The US Treasury 10-year yield is now at 4.04%, down 2 basis points from yesterday at this time. The price of gold will start today at $3,679 an ounce, up $38 from yesterday. And American oil prices are up $1 at just under $63.50 a barrel, while the international Brent price is firmish but up less at $67.50 a barrel. And the Kiwi dollar is just under 59.7 US cents, up 10 basis points from yesterday. Against the Aussie, we're down 10 basis points at 89.5 Australian cents. Against the euro, we're also down 10 basis points at 50.7 euro cents. That all means our trade-weighted index starts today at just over 66.7 and little change from yesterday. And the Bitcoin price starts today at $114,938 and down 0.6% from yesterday. Volatility over the past 24 hours has been low at just under plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.